What's up, traders? So today I'm going to show you the 4 ETFs that I will be trading in 2025 to bring in an extra $500,000. But if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in multiple six figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle. Now, the 4 ETFs that I'm going to tell you about today, I started trading them late in the year last year in 2024. And collectively, all 4 together, I made about $70,000 from just those 4 ETFs alone. However, I only traded them for maybe 2.5 months. But I can easily see me making $500,000 this year from those 4 ETFs. And I plan on making enough from one of them in order to buy a new Tesla Model X this year and use that as a tax write-off for one of my businesses. So make sure you stay to the end of the video so you can see which one that is. And with that being said, make sure you like and subscribe this video. Let's get down to business. Now, all 4 of these ETFs are leveraged ETFs. Now, if you're not familiar with leveraged ETFs, they are simply an ETF that looks to follow a sector or a stock, and they look to move 2 or 3 times the daily move of that specific sector or stock. So a quick example, if there's an ETF that follows Apple, if Apple were to move up 1% for the day, a leveraged ETF would look to move up 2 or 3% for the day. And the same works in reverse. If Apple were to be down 1% for the day, the leveraged ETF will look to be down 2 or 3% for the day. Now, because leveraged ETFs have larger moves, they are more volatile. And the more volatile a stock or ETF is, the more the options premiums are. And it is because of that reason alone that I trade them, because I am an option seller. And as an option seller, you want the options premiums to be as high as possible. And that is why I utilize leveraged ETFs. And the first ETF out of this list is BITX. BITX is a leveraged ETF to Bitcoin. Now, I'll be honest. Previously, I hated anything that had to do with cryptocurrency. And the reason for that is there's no real way to determine the actual value of it. Me as a multiple business owner, I know all about looking at cash flow statements, income statements, and balance sheets, and determining the value of a company based on their free cash flow. Well, there's no way to do that with Bitcoin. It's simply worth whatever the next person thinks it's worth. So I never touched anything that had to do with Bitcoin until the election. And with our upcoming president being very supportive of everything crypto, that's kind of changed things for me, because there's obviously money to be made there, and you can always find me where the money's at. And on top of all of that, Trump has talked about storing Bitcoin very similar to how we store gold. And once the US government starts buying Bitcoin, the sky is the limit. Okay, but as you can see here, BITX is a $57 stock currently. There's almost $3.5 billion in assets under management. And if you look down here at implied volatility, it's at 115%. Which is a very large number, which is exactly what we like as an option seller. All right, but if we look at the chart, this chart here is showing the last year, but you can see how it shot up right after the election. And as of recent, it had a little drawdown, but now it's going back up. And you can trust that I've been trading it as of late. But what I'll do is I'll show you the second ETF, and then we'll do a live trade. And then after the live trade, I'll show you ETF number 3 and 4. And the second ETF I'll be trading is ticker symbol SOXL, which follows the semiconductor industry. All right, so you can see that it is a 3x leveraged ETF for the semiconductor industry, and it moves very similar to ticker symbol SMH. If you look down here, you can see some of the holdings for this ETF. We can see we have Broadcom, that's the largest holding at 8.4%, and then it's Nvidia at 5.7%, AMD, Qualcomm, Texas Instruments, Marvel, so forth and so on. And it looks like this ETF has 37 different companies within it. Now, I am trading this because I am still very bullish on semiconductor stocks. If you think the AI run is over, you are crazy. I do believe that we're still at the very beginnings of the whole AI thing. Like if we just look at Nvidia, which is one of the largest holdings in SOXL, their growth is still amazing. And their expected future growth is amazing as well. And you don't even have to take it from Nvidia themselves. If you just listen to some of their biggest customers, such as Microsoft and Facebook, they've already come out saying they're buying a ton more from Nvidia. So with that, I think that the future is bright for semiconductor stocks. But let's take a look at SOXL. So we can see that this ETF has $9.7 billion under management and currently has an implied volatility of 82%. Which is not as high as BITX, but it's still high nonetheless. Now, because I am bullish on these 2 ETFs, I am going to sell puts. Now, if you're new to selling puts, the objective is to 1, generate income, of course, or to acquire a stock at a cheaper price than what it's selling for today. You may hear selling puts referred to as short puts, naked puts, or cash secured puts. But selling puts is essentially just like selling car insurance, but instead of insuring a car, you're insuring a stock. But let me explain. Let's say you're interested in stock ABC and you wouldn't mind owning it, but you want it at a cheaper price. And it's currently selling for $100. Well, what you could do is sell a put at $85. And by selling that put, you are agreeing to purchase the shares of the company if the stock were to crash and go under that $85 strike price. However, if the stock stays above $85 throughout the term of your contract, then you just keep your money and go about your day. Okay, so we have ABC stock at $100. You're selling a strike at $85, and let's say the contract is for 14 days. And let's say you got paid $200 for this contract. Well, from here, there's only two things that can happen. One is ABC stock stays above $85 throughout the term of the contract, and you just keep that $200 you were paid and you go about your day. Or if you're like me, you'll keep selling puts over and over and over again on that same stock. Or the second thing that can happen is ABC stock drops below that $85 strike, and then you're forced to buy 100 shares of ABC stock per contract. But you still keep that $200 you were paid. Just like your car insurance company keeps the $200 that you pay them every single month. Well, if you're like me, your insurance is a lot more than that. Here's the thing though, you are fine with purchasing the 100 shares of that company because it's a company that you like anyway. So you essentially are either paid to wait around or you're paid to get a discount on something that you really want. And I don't know about you, but for me, that just sounds like a win-win. So let's head over to Thinkorswim and place an actual trade on one of these ETFs. Now here I have SOXL's chart pulled up. And the first thing I want to know is what is the range that the stock is trading in? And in order to figure that out, I use what's called the Bollinger Bands. So if you look at the chart here, these black lines, those are the Bollinger Bands. And the Bollinger Band just simply aims to show you the range that a stock is trading within. Because 95% of the time, the stock's price stays within the Bollinger Band area. And you can see here, the very few times that it pops out of it, it pops right back in. When it pops out, goes back in, pops out, goes in. And we can see just recently it popped out and then came back in. So 95% of the time, the stock price is staying within the range that the Bollinger Band is showing us. And we can see for SOXL, the range is currently between $26 and $31. So we'll keep that in mind. And now let's head to the options chain. So here I am at the options chain. I have SOXL pulled up. And next thing we need to do is select an expiration date. And for me, I always stay within an expiration date of 45 days. And the reason for that is the time value decays the most within 45 days. And as option sellers, that's what we want because we want to receive a high amount and pay back a very low amount. So you can select any day within 45 days, but let's say for this trade, we're going to go to this date that is 34 days out. All right, so I'll click on that. And the second thing that I want to look at is the expected move. Now with Thinkorswim, you can find that right over here. They actually call it their market maker's move, but it is essentially the expected move. And you can see it says plus or minus $5.59. That is essentially the greatest move that the option market is pricing in for SOXL by this date. And I like to be somewhere near the expected move. And then the third thing that I look at is the delta. Now delta you can find in this column over here. If you look at these numbers, you can see, so right here it says a delta of 0.10. Delta is just the probability of the event occurring. So at a strike of 0.10, it is saying there is a 10% chance that SOXL's stock price drops down to this $22 strike by this expiration date. And for me, I like to stay below a delta of 0.20. Now that's just what I like because I have a very large account and I can afford to sell a ton of contracts very far out. However, if you have a smaller account, you want to be a little bit more aggressive. So if you do have a smaller account, what I did when I first started trading is I went to a delta of 0.30. So let's look at the delta of 0.30. It looks like that is right at the $27 strike. And we can see we will get paid anywhere between $165 to $184 by selling a put right here, right now. All right, so if we sell this put, as long as SOXL's stock price stays above $27 by the end of the expiration date, 34 days from now, we keep the money we received and go about our day. But if it drops below our $27 strike, then we need to buy 100 shares of the company. All right, so let's go ahead and place the trade. I will right click and hit sell. I'll go up to single because it is just a single leg trade. And then now we need to select our amount of contracts. And for this, let's say we'll do 5. All right, this is just an example. I typically do much more than that. but you'll be able to just see this from the example. So we'll come over here and we need to select our premium, the premium we want to collect. And I normally just go around the mid price. Looks like the mid price is currently $174. And at those 5 contracts, we can see we'll receive $870 right here, right now for opening up the trade. And if you look down here, the next column shows you the max loss, and you'll see it shows a max loss of $12,630. Now, don't let that number scare you. That is if SOXL went to $0 while your contract is open. And seeming as it is an ETF with like 37 different companies within it that are all very high quality, the chances of this ETF going to 0 is very, very, very slim to none. But that is how I would place a trade on SOXL. But the members of my Trade to Freedom community get to see my actual trades in real time as soon as I enter them, and they get my entire options framework. So if that is something you would like to learn, feel free to click the link in the description below. But with that, that brings us to our third ETF, which is ticker symbol TNA. Now, TNA follows the Russell 2000 small cap stocks, and it is a 3x leveraged ETF to the Russell 2000. And the reason I'm bullish on TNA is because the Fed is in a rate cutting cycle, and having lower interest rates benefits smaller companies much more than it does larger companies, because those smaller companies need access to the capital. So now that they'll be able to borrow funds at a lower rate, they should be able to grow their company much cheaper. But TNA is currently a $43 stock. It has about $2.5 billion of assets under management, and the implied volatility is about 63%, which will be the lowest out of the 4, but there's still money to be made with TNA. And looking at the chart here, we can see that the Bollinger Band says that it should stay within a range of $39 to $49. And that seems to be true, because if we look back all the way to September, that $40 support has pretty much held strong. So I really feel comfortable selling puts at anywhere under $40 for TNA. And I'll show you how I would trade this in just a moment. But that brings us to today's sponsor, the Dare to Dream community. Every great achievement starts with a dream. Turning dreams into reality, that takes consistency, focus, and the right support. The Dare to Dream community is your daily accountability partner and personal growth hub. With morning power calls, evening check-ins, and one-on-one mentoring, they keep you on track and inspired. For just $19.99 a month, join a tribe that's got your back and make 2025 the year you take control of your life. Stop dreaming, start doing. Link in the description below. But that brings us to our fourth ETF, which I will probably be making the most money from this year, in which I will use the funds from this specific stock in order to buy a Tesla Model X. And that stock is ticker symbol TSLL. All right, TSLL is a leveraged ETF that follows Tesla. And man, I love Tesla, the company, and I love trading Tesla. I currently have a Tesla Model S that is treating me very well. And there were some past years where I only traded Tesla stock, which in hindsight probably wasn't the best thing to do. However, I made a ton of money doing so whatever. But Tesla is a company that has grown their free cash flow pretty amazingly over the last several years. And on top of that, now he is literally going to be part of the federal government, as he will be the head of the new Department of Government Efficiency. And we all know that he's like best friends with Trump now. So that means the great things for Tesla's robo-taxi. Now, while I do admit Tesla does have some work to do in order to make their cars safe enough to drive on their own with no human interaction, I will say they are getting very, very close. I've had a Tesla for the last 4 years, and I've seen over the years how their updates have gotten better and better and better. But now with him being friends with the President of the United States, he has a much easier path to get regulation passed in order to allow Tesla to have self-driving cars in their robo-taxi network. And that is a multi-billion dollar industry within it of itself. But if we look at TSLL, it is a $28 stock currently, $4.9 billion assets under management, and it has an implied volatility of 138%. So that is very, very high. I believe that is the highest out of the 4. So naturally, TSLL should have the highest premiums out of the group. But if we take a look at the chart, we can see that the Bollinger Bands say that it has a range between $26 and $38. And you can see how it just recently popped out of that Bollinger Band, but you can see it is already back within it in a single day. So let's head over to the options chain. Now I have the options chain pulled up, and first let's take a look at TNA. And I put up the exact same expiration date that we did for the previous ones, 34 days out from today. And remember, for TNA, I said that I would be comfortable selecting any strike under $40 because that $40 support has held strong for the last 4 months. Okay, and the strike of $40 is below the delta of 0.30. And it looks like at the $40 strike, we will receive anywhere between $135 to $175 for opening that trade. So again, in Thinkorswim, you could just right click, go to sell, hit single. We can just go ahead and select 5 contracts just for this example. Set your premium to the mid price at $155, and then you can hit confirm and send to send that order over. But now let's look at my favorite one, TSLL. So we'll come up here, put TSLL in the options chain, and we're going to stick with that exact same expiration date of 34 days out from today. And if we come over to the delta column, we want to stay under a delta of 0.30, so 25 would hit that mark very well. And you can see just how amazing these premiums are. The bid and ask prices are between $225 to $295. And because the premiums are so high, you could be a little bit more conservative with your strike price selection. But if you want to be just as aggressive as you were with all the other ETFs, then we'll go ahead and select this $25 strike, hit sell, go to single, and we'll do 5 contracts per normal. And the mid price is $260. So we'll hit confirm, and we can see that we will be paid $1,300 right here, right now for opening up this trade. And as long as TSLL stock price stays above the $25 at the end of our expiration date, we keep our money and go about our day. However, if it drops down below our $25 strike price, then we'll just purchase the shares of TSLL. Now, if you decided you didn't want to purchase TSLL anymore, you could just buy to close the trade, but it would be at a loss. So a good thing to do is to do this type of trade on a stock that you would really like to own. Now, as a bonus point, it's best to do these trades on a day where the stock is down. And the reason for that is because you'll simply make more money because all the put buyers are scared and they're insuring their stocks for more and more money because they're scared of it going down even more. And as you can see on this day, TSLL was actually up 16%. So that's actually one of the worst times to sell puts theoretically if you're trying to collect more and more money. Because let's say it was in reverse for this day and it was down 16%, well, the premiums will be way larger. But let's go ahead and calculate our rate of return for doing this trade. So in order to calculate our rate of return, we need to do the premium we received, which was $1,300 for this trade. And then we will divide that by our max loss. For this one, it is $11,200. All right. And then you will times it by 100 to get your percentage. And that is an 11.6% return for the 34 days that we're in this trade. Now, that's amazing. First off, the total market, if you just invest in it, averages about a 10% return annually. But by doing this trade, you'll get an 11% return in just about a little over a month. So you are essentially getting 12 times what the average market investor is getting. Now, if you want to annualize this, we are in this trade for about 34 days, so it's just a little over a month, but we can just go ahead and times this by 12 since there are 12 months in the year. And that will be a 139.28% return annualized. And if you were to be able to somehow do that every single year, you would be one of the richest people over the next several decades. So those are the 4 ETFs that I'll be making an additional $500,000 from this year. But if you would like to learn more from me, come and join the Trade to Freedom community. Not only will you get my actual trades in real time, you'll also get my entire options framework, and it comes with my free course. And you'll also be within a community of other people that have the exact same goals as you. But that's it for this video. Make sure you hit that like button and subscribe, and I will see you guys on the next video. Peace!